Good morning, good afternoon, and good evening, whenever you're watching or listening to this. And welcome to Link Up Leaders, your direct link to leaders in supply chain and e-commerce. My name is Lisa Kinski. I'm your producer and co-host, and joined as always by Francois Jeffrey. Francois, how are you today?
I'm great. How are you?
I'm wonderful. I'm vibrating at a different level
Yeah, you said that.
dude.
What are you on the coffee?
I'm on three things. One,
Okay.
as you know, Jay went into labor today. So we're going to have a new office baby, which is very, very exciting. Hoping everybody a very happy and safe and wonderful delivery. Two, it is the first day of fall, my friend. So the
You mentioned that,
festive
yeah.
mugs have begun. I have here a big fat mug for those watching. They can read Autumn Leaves and Pumpkins, Please.
Not basic at all.
Not at all.
No.
I wear it with a badge of pride. And three, I just had the most electrifying conversation with Cassandra Craven. And I know that you
Awesome.
know that I have been a big fan of hers for a very long
Anytime
time.
I see you like smiling or laughing at your phone and you're on Insta, I figure you're watching one of Cassandra's stories.
I usually am.
Or, I mean, they look like they had a blast in Miami.
They did. They
Like
had such
that
a
looked
good
like an
time.
insanely good time. I very
Yes.
much enjoy. I think I followed. It kind of looked creepy, probably, but I think I followed most of them while they're on their trips to Miami because it looked like it was such a
No,
great
I
time.
totally
was
did
like,
too. And then when they were in, I think it was when they were in Vegas that they did Prosper, and then they followed it up with Yana's bachelorette trip. I follow
right.
Yana, I follow Cassandra, I follow
And her
Destiny. So I was like,
wedding, it looked amazing
so you
too.
saw the pictures?
Yeah, I did. Yeah, I messaged her. I was like, that is one of the most beautiful weddings I think I've ever
Oh,
seen.
oh my God. It
It
was
looked amazing.
stunning.
Yeah.
It is a wedding planner's fantasy. It was just the best thing. And I have a friend who's getting married soon, and that's like her whole aesthetic. And I was like, is it super creepy if I just take a bunch of screenshots of her Instagram story? I was like, I'm not gonna do that. We'll do something else for hers.
You got to
So
do the phone on top of the phone. That
oh
way,
my God, I have two phones.
you have two phones.
Why didn't I think about that? I'm Kevin Gates. I got two phones. Anyway. So coming in hot today, all sorts of energy. How are you doing? You said you were doing good. Where are you at energy wise? I need you at a 10.
Yeah, I'm good. I went to the gym earlier this morning, got most of my energy out. Um, this is my first cup of coffee though, so
Wow, that's late in the day, my friend.
I know. I'm trying to.
Trying to cut back.
It's an ebb and flow, right? I
Okay.
think like if you would have heard an episode, probably 6 weeks ago, I'm like I'm off of it, I'm
Mhm.
done, and then
Yep.
like 3 weeks ago, I'm like I'm on it, and now I'm trying to
Yes.
cut back on it because yesterday I had 3 cups,
Mhm.
and then I didn't realize, and I was laying in bed, and I was like, oh shit, what's going on? But whatever, it is what it is.
I never correlate the two, man, because I think I'm so used to like, for some reason, I still think that I'm 22 and bartending, and then I
Mm.
can just like down some Red Bulls, closing the bar, and then go home and go to bed because I'm so exhausted. I've
Yeah,
been sleeping like trash the last couple of nights. This is probably why I had my first cup of coffee yesterday at 4 p.m.
that's definitely it. I mean,
That's
I'm only
100%
doing
it.
it right now because I know I'm gonna have a late night, so figured I'd drink it now. It'll last me till like 8 or 9 p.m.
That's a long
So
time.
I know.
Hmm.
Well, I also water down on my coffee.
Oh.
So it's like I don't get all the caffeine. So I'll typically have like 2 cups of a cup of coffee that's already halved. So
Well,
it's
you
like 50 milligrams of coffee instead of the typical 100. And then on top of that, I will half that. So it's only 25 milligrams of coffee per cup. So it's still not that bad.
okay. That's not bad.
Yeah, could be worse.
It's not like pounding a pre-workout like before bed. That's
Yeah, pre-workout before bed. I made that mistake a few times. But we're completely getting off topic.
super off topic.
Super off topic.
High energy, first day of fall, ready for this conversation. And I gotta tell you, if you've been a listener or a watcher of the show for a long time, you've heard me say at least 3 times how poorly I did in finance and accounting in college, which the irony of that is my mom's a bookkeeper. So try as they may, I can manage my own money, but not a business's. And if that is also true for you, if you're an e-commerce business owner who doesn't know how to do their books, we've got the episode for you today. All of a sudden, I sound like a 90s commercial. Let's bring our guest on. We have Alan Chen with us from freecashflow.io. Did I say that correctly?
That is correct.
Perfect. How are you doing today, Alan?
Good. Thanks so much for having me on, Lisa and Francois. I just heard your little banter there, and I went and grabbed a matcha energy shot because I feel like I need to keep up with it 11 out of 10 energy that's going floating through this podcast right now. So I'm just gonna open this up, make sure I can keep up.
You know
Does
what,
that
though,
work
man?
for you? The matcha?
Yeah,
the
so
matcha
I'm
tea?
not a very big coffee person. I know you guys are big. My wife is. She drinks like 3 to 5 K cups a day, I think. I'm like, I always tell her, if the world runs out of coffee, what are you gonna do? And she just froze. There's no answer to it, right? So, but I'm more like a tea person, and then I try to get my caffeine to this.
Have you tried yerba mate?
I have not.
No, that's actually pretty good stuff too. I think
it?
that's like 50, 75 milligrams of caffeine in it. Pretty smooth. It almost tastes like you're having like a ginger tea, except it's yerba mate. Yeah,
okay, that sounds healthy.
It's pretty good.
Yeah, okay. Gotta give that a try.
I don't know if it is, but it is what it is. It's not
okay.
coffee.
Just close your eyes and drink it, and hope you wake up one day.
Exactly.
Exactly.
Yeah, we have a newborn baby, so it's all about staying awake, keeping the baby.
I was about to say
that's our mission statement right now. So
your wife can have as much coffee as she wants, because I'm sure.
I'm not stopping her. We're buying the Costco packs these days. Yeah.
There you go. Awesome. Well, Alan, welcome to the show. As you said, we said that you are a CPA and you are a dad. Is this your first child?
It's my second, actually, and it doesn't get easier as the rumor may be. Having a second one, it just means you run out of hands and legs for them to grab onto. So I would not advise the third one, because you literally don't have any more hands for babies and toddlers. I have a 3.5 and a 9-month-old.
Oh, gotcha. Okay.
So they're still babies.
Yeah.
They're still little. Yeah.
They're still little and don't have that comprehension. We're saying, Dad needs a minute. Just like, they just want to play. They just want your time, which is awesome, actually. Right. I've seen so many dads interact with like teenage girls. I'm like, okay, this is good. I'm not getting too much sleep. I'm drinking all kind of matcha shots, but I'm enjoying this wanting to spend time with you kind of time. So I'm trying to think in that perspective right now, even though it's just a few hours sleep.
Exhausting.
Yeah.
Very true.
Well, on top of being a CPA and a full-time dad, why don't you tell us a little bit about what you do? I mean, CPA is what you do professionally, but talk to us about what you do in the day-to-day and how you help e-commerce businesses.
Yeah, definitely love to do that. So like I said, my name is Alan Chen. I'm a certified public accountant. I'm located in Los Angeles, California. That's where our home base is. And we run Free Casual Agency. And we're basically an online accounting and tax agency that specializes in one niche and one niche only. Going to that 90s commercial mode. Well, only for e-commerce and online businesses. And that's really all what we focus on. We offer what we call an all-in package. We try to take care of all your back-end compliance work, right? That goes from anything from clean bookkeeping to sales tax implementation, federal and state tax planning, consultation, and then eventually, when you get to a point, your cash flow projections and valuation for your business, as everyone strive to exit the business and have a great payday, right? Find that financial freedom. So that's kind of what we're all about. And we actually got into this niche, me and my partner, Stanford, who's also a CPA, because we started out as also like Shopify entrepreneurs during the pandemic. So we were in there because we wanted to give it a try. It was the hot thing to do, right, during the pandemic, because everyone's at home. And we found it was just so hard. Like, you have to do everything yourself, right? Like, you're a solo entrepreneur. You're the guy talking to customers. You're the guy doing fulfillment. You're the guy trying to do website design, even though you don't have a programming background, right? You're the guy trying to talk to like suppliers in China on Skype at 3 a.m. because that's their time zone. And that's the only time to talk to them, right? So we're like, man, there's so much thing to do. When are they going to think about tax and accounting? And then we see these guys on the forums who scale crazily, right? Which is awesome, like 7-8 figures. And then they start maybe getting letters from the IRS. And then they start stepping back and thinking about, did I pay too much tax last year? They don't have time to think about it. And then we step back and be like, we're just okay entrepreneurs, but maybe we can be better served helping these guys and solving that pain point for them, right? So we're like, let's do that instead. So, we did the whole 6-month entrepreneur thing, learn a lot of insights about what they have to go through, all the Facebook ad bans and things like that. And we're like, okay, now that we know how to serve them better, let's do that. Let's take out 20 years of combined expertise and set up shop and make sure we can serve them the best we can.
That is awesome. And so you guys are no longer selling on Shopify then?
Yeah, that was a great experiment, but we have closed shop.
Okay, gotcha.
Our most successful product was the Rose Bear. I'm not sure if you guys seen this product, but it's basically a bear shape, but then made of roses. Yes, but artificial roses, right? So
I was about to say, did you do the real ones? Because that's
no, because that would be a nightmare. Because we started out drop shipping, and a lot of people do, right? And then we decided to do the whole let's eliminate the shipping time pain, right? So we imported goods from Alibaba. And then we started just like being fulfillment centers at our own home and just started shipping them outside. And that was a crazy nightmare too. My wife had to pitch in. We're like up hours trying to like make sure the ribbon is tied correctly, because it's a gift item, right? You want it to look pretty, and you should buy it for your wife or girlfriend. Like Valentine's Day was a big hit. It was one of the biggest month for us. And then we put this out, put a little card on top, and then we put it to them and try to give them like good experience that we can, since we're handling the logistic ourselves. But it was a ton of work. Like we weren't big enough to go to fulfillment center like what we wish we can go with you guys, for example, right? But yeah, we weren't there yet.
And tying those little bows like that is so painstaking, because what people don't realize is to tie like a gift bow or like a wedding invitation bow, which I have much experience with, is not the same as tying your shoes, because you have to have like the 2 bunny ears up top and the ribbons on the bottom. It is not intuitive tying. It takes forever.
I watch countless YouTube videos to try to master that. Yeah.
Yes.
Arts and crafts is not my forte. As given I'm an accountant. If it's not numbers related, then I'm like, oh god.
Well, that is a hilarious story. One thing that I did clue into, and the very beginning of what you were explaining, was teaching people clean bookkeeping and compliance and tax and stuff. What does that mean exactly?
So the whole reason why we have this model that we have is we realize that, when you actually go out there and find solutions to help some of your back end things that comes up as you grow your business, you're going to find a person that can do bookkeeping. You're going to find a person that knows sales tax. You're going to find a person that can do your tax return on April 15th, right? And the problem is now you got to talk to 3 to 4 accountants every month, and no one wants to talk to 3 to 4 accountants every month. Let's just be honest, right? And then beyond that, you're going to need all of them to sync together. You're going to be like, hey, this guy needs to talk to this guy because he needs to give him his bookkeeping data. And then this guy needs to talk to this guy to see how his sales tax and what triggers he's going to have. And it's just a whole mess, right? So what we try to do is simplify that process. We're saying we're an all-in service. Give all your things you don't want to do to us, and we'll figure that out for you. And that starts with clean bookkeeping. And what we mean by clean bookkeeping is, I think a lot of times owners are like, I can do it myself. I want to save some money, and I'm just going to do it myself. And at the beginning, it is a good idea, right? If you're still small and you're scaling, it doesn't make sense for you to hire out, honestly, right? So what they do is they try to do it themselves. And then once they get to a certain size, they come talk to someone like us, and they let us see their books, right? And then we see that it's all over the place, and a lot of things don't make sense. A lot of things make sense to them. Like, oh yeah, I have a note here about this. I have a note here about this, and then it's just everywhere. So what we try to emphasize is clean bookkeeping, is things that you would be proud to show your mama, but what we're more proud to show a venture capitalist or a bank official, right? Something where if you need capital to boost your your inventory, you can happily show this person, and they're not scratching their head saying, I don't know if they're running that legit of a business. I can't make out this chicken scratch, right?
Gotcha.
So clean bookkeeping is something that you will be able to show anyone, and they'll understand how your business is doing and how you're growing. And you want that, right? Especially if you're going towards the valuation stage. You don't want to be discounted for all the hard work you put in. And God, it's a lot of work being a solo entrepreneur. Yeah. So you want to make sure that you can get the deserved payday that you want. And not having clean bookkeeping is a detriment to being able to do that.
Gotcha. I heard clean bookkeeping and was thinking it might have been more like antithesis of like dirty bookkeeping, as far as like cooking the books, kind of.
Oh,
you know what I mean?
It's gonna appear like that, right? If you show someone like your version, like these clients' version of their books, they're like, I'm not sure what they're doing is correct, and what if they like the worst thing is for someone to not believe your books, right? If they think you're over reporting your revenue. Or under counting your expenses, right? You're just missing a lot of expenses on your books, and they're like, do you really have this much net profit? And they have that doubt in their mind. Then they're not going to be the one that's going to give you the best offer, or any offer, right? If they have doubts in your business.
Gotcha. Okay. Francois, what do you got?
Yeah,
I have 1,000 questions.
That was actually there was a question that you had the other day after a conversation that we had, and it was it was more so like, at what point do these go ahead, we could probably ask it before better than me.
So I forget who we talked to, but at a certain point in time, okay, so like I do wedding planning on the side, but I don't do it under an LLC. I have a girlfriend who has a crafting company. She doesn't have it under an LLC yet. And I assume that that's how a lot of these Amazon and Shopify sellers start out, is they just, buy something off of Alibaba, they make a listing on Amazon, and then move along with their day. At what point in time is it like a SKU number, or a like a revenue, or like a profit number? Does a seller have to create an LLC, or an INC, or does it make a difference?
Like EIN number, I think is what you mean. Okay, I guess what you mean. Okay, I got it. Inc. Yeah, that's great question, Lisa, by the way. So that's a question we get a ton at our agency. And the whole thing what we try to tell the client is you don't want to evaluate on any one factor. You want to kind of look at it holistically, right? A person that's maybe only selling, say, like a really simple device or like something non-electronic, something that most of the time won't cause harm to your consumers. Let's put it that way, right?
Okay.
Versus something that is battery power that might explode in your face, right? That's an item that has more liability, right? The whole point of setting up an LLC or a limited liability company is to provide you with that extra layer of protection for your business, right?
Mm-hmm.
So say, you're absolutely correct, Lisa. Most people are what they call solo entrepreneurs. They just say, one day it's like, I have a great idea. Let me sell this online, right? And they just go and do that, right? And the problem with that is, if you are selling an item and an item happens to have some kind of liability attached to it, where a consumer gets it, something happens to them, and they say, hey, this product caused me harm. I end up in a hospital. Well, I'm going to sue that company, right?
Mm-hmm.
Well, if you don't have an LLC in place, there's nothing to sue. They're suing you directly, Lisa, right? And what happens is that means they can go through your personal assets, right? So if it does go bad, if they win a big settlement, they can go after your house, your mortgage, your car, your boat, if you have a boat, any asset that you have. But an LLC gets that extra layer, right? It's saying that you're only limited to what I have in my business. So yeah, you can bankrupt my business, but hey, me, Lisa, I kept my card, I kept my boat, and I kept my house. So that's why you want to set up LLC. And I can't say there's one factor, but usually if you're about the mid 6-figure range, I would highly advise that's when you start really thinking about, hey, my business has grown pretty big. I have tons of customers. There is a small chance one of them can be like, this item, like the roses on this rose bear prick me in the face, right? Even though they're fake, so that's very hard to do. But we try to find really safe items to sell, like you can see, right? Given it was CPA background, but then say it's real roses and have thorns, I don't know, and cause them harm. Yeah, then they can come after you. But if we have an LLC in place, which we did, then they can only go after our inventory, right? They can only take all our bears away and liquidate them and pay off that settlement. But they can't come after my car, my house, and things like that. And that's why you want to have LLC in place. It's highly recommended if you at all think that your business is going to grow to a certain point. It's pretty easy to set up these days. Like in the old days, you had to talk to an attorney and all that. But there's services now that can do it pretty easily for you. So it's really not too cost inhibitive neither. So I would highly recommend if anyone's set up. And there's certain stages you need to set up, but we can go through that too if you're interested. But that's a whole nother talk we have about clients.
Gotcha. Well, and thank you for elevating me to a homeowner and now boat owner.
I don't want to under elevate you, so I just want to make sure, just in case you do have those things.
But thank you for wrapping that. That makes a whole lot of sense. So it kind of depends on, obviously, if you get to a certain monetary threshold, you're going to want to protect those assets, and then also kind of the nature of the product too.
Yeah, the risk factor involved.
That makes a lot of sense. Yeah, thank you for bringing that back up. I didn't think to ask that during today.
Yeah, it was sitting in my mind for the past few days, and I know I Googled it a bunch right after you asked me, because I was like, shit if I know. So it was pretty much exactly what Alan actually described, except in a much longer format. Thank you for making that digestible, because I know there's tons of, particularly nowadays with everyone moving into e-commerce, I think it's just a lower barrier to entry, and knowing these little facts are definitely important. But as you scale up, I guess, considering an LLC and a CCorp or an SCorp, how would you recommend that you structure a business, particularly as you start to add maybe new partners, or as you start to look into new ventures or new capital?
Yeah, great question, Francois. So how we look at the 3 different kind of business entity that's most commonly known, which is an LLC, SCorp, and CCorp, is we recommend that most businesses starting out and they have grown to a certain size to start off with LLC. Reason is the easiest setup, the least amount of paperwork to go into, and it just gets you that limited liability protection that you really want as a business, right? So that's where you want to start up. Now, why people are recommending the SCorp, right? SCorp, it's kind of like a hybrid model between a CCorp, which is very complicated, and an LLC, which is very easy. So it's that in-between thing. And what SCorp provides for you is it's saying, hey, you still get that liability protection, but you're now looking like you're also more of a bigger company setup, right? In SCorp, there's more paperwork involved. There's more filings you have to do to set up an SCorp. But the main benefit that everyone I think grabs onto for an SCorp is that there is what they call self-employment tax that you have to pay as a business owner, right? So if you to give you a little background, so like say you're like just a worker, right? Like you're a common 9-to-5 worker for a company. What happens when you're just a 9-to-5 worker for a company is you have to pay a portion. Your employer pays for a portion of what they call your self-employment tax, and then you pay for a portion of it, right? You get to split that, so it's around like 7% each. But as a business owner, you are the company, right? There's no one above you. So then you have to pay both portion of it. You have to pay like 14.65%, something like that, right? And SCorp basically says that you can actually act as an employee of your own company, right? You can actually be the employee and employer. So it's kind of a crazy little loophole thing where in this case, you can basically declare that you have a salary in the company, right? Say, this is where it gets complicated and where you probably need to get some help from a CPA accountant is because you got to look at kind of market average for someone who does your role, someone who does kind of what you do and say, hey, I think I deserve to earn like $50,000 a salary in my company. And what happens is, say your company's net profit is 100,000. We'll use nice 90,000, probably better. 90,000 net profit in your business. If you're saying that you can earn $50,000, that means that $50,000 is the only part that's going to be subject to that self-employment tax, right? The remaining net profit of the 40,000 is no longer subject to that self-employment tax of that 14%. So you get to save a lot of self-employment tax money when you go to an SCorp. So that's the main reason people, when they get to a certain net profit level, they say, hey, Alan, can you switch me to this? Like, is this a recommended path for me right now? Now, a C Corp is the most complicated ones, right? It's what you know. It's like the Facebook, the Google, they're all what they call inks, right? So in a C Corp setup, a lot of paperwork, a lot of things that go do. You have to set up a board of members, right? Like a president, vice president, secretary, and the two main reasons why you want to set that up is if you're trying to be as legitimate as possible in the eye of the public, and two, you're trying to raise money, right? If I'm sure you heard of the startup world, once they get to a point where they're like, I need to bring in Series A money, I need to bring in Series B money, that's when they're like, we have to be a C Corp, right? Because a C Corp is under a lot of scrutiny. They're the one that gets the most, regulation oversight on them. So their books are what they call audited, right, by an auditor, a financial auditor. So they're basically the most believable business entity. They're saying, hey, we're legit. We're not afraid if you want to look at our books. It's been vetted by a third party that they're as accurate as heck. And we're trying to raise money. We're trying to get you to give us your money so we can grow bigger and bigger. So I think for most e-commerce and entrepreneurs, they start out by doing the LLC. SCorp when they get to a certain net profit level, if it's beneficial to them, and only if they don't have too many partners, because SCorp does have a lot of rules about how many shareholders you're going to take in, and it's not very great for foreign owners. They don't allow foreign shareholders, right? So if you're like an international business trying to set up ground in the U.S., right, to take advantage of things like not having the foreign exchange rate hit your payouts, not getting access to bank accounts and credit card products in the U.S., you can't do an S-Corp, unfortunately. Your options are really only LLC and a C Corp in that case.
Now, is that for what if you have residency in the
residency,
US?
meaning you have a social security number?
Right.
Yeah. Then you can do that. You can get if you have residency status in the US.
Got it. And so, as right now, are you working with any companies that are sort of going through this S Corp to C Corp transition?
No, actually, all our clients right now are all on an LLC right now.
LLC.
Yeah,
Okay.
it's just the easiest setup. Like there are monetary benefits to going to S Corp, but then you do add layers of complications to your compliance work that you have to do. So we explain all that to them. We go do the pros and cons of what the gains you get from not having to pay a certain portion of self-employment tax, and it does cap out, by the way. Like at a certain threshold, it's no longer beneficial again, right? So it's because if you think about the self-employment tax, a portion of that is the Social Security and Medicaid that you paid, and they both have caps on it. Where at a certain point, you just stop paying even more Social Security and Medicare to the government.
And I mean, I imagine just even with those different layers, as you're growing, there's more than just these structural complications in accounting, right? Going from, let's say, 10,000 to 100,000 to $1 million to 10 million to 20 million. What are some of those different accounting issues that I guess an e-commerce business should expect to encounter?
I'm so glad you brought that up, Francois. We've been dealing with that all last week. So I'm not sure if you guys been following what Shopify just rolled out, but Shopify just rolled out what they call, it's almost like a kiss of death for a lot of e-commerce owners right now. It's this new sales tax dashboard that they have added to every single Shopify owner's, like, that front page you see in the Shopify owner dashboard. It's basically this line now that you see it there saying, hey, you have XX sales tax liabilities in all these states. Do something about it. And it's basically created this torrent of panic right now in e-commerce owners. Like, we've been getting hit up by all our clients and a lot of DMs when people are saying, what is this? What should I do about this? Right? So as you were mentioning, the scaling up, the whole thing about this is sales tax is one of the most complicated topics right now for e-commerce owners. And we want to go back to a little bit of a history lesson. It's all due to this court case, right, called Wayfair versus South Dakota, which basically declared that, it doesn't matter that in the old days, all they care about is your physical nexus to charge you sales tax. So then you have to physically have an office here, physically have a warehouse here before they say, yep, you have to charge sales tax to your customers, right? Now they don't care about that. They caught on to the game. They know most businesses are on remote. Most businesses are online now. So what they care about is what they call economic nexus. And economic nexus basically means you have an affiliation or connections in place through a concentration of customers that you have in that state. Now, a common threshold number you guys going to find or define is going to be like 200 orders or around $100,000 in sales. Right?
Is that per state or total?
Per state? Yeah, every state has their own rules.
State.
Okay. Yeah, every state have their own rules. So what you're going to encounter, say, and let's just take sample for Florida, right? Florida follows the South Dakota model saying 200 orders or $100,000 in sales, right? And what happened in that case is it doesn't matter if you have a presence in Florida, right? All it matters is that you have shipped over $100,000 of goods to the state of Florida of customers, right? And that if you have done that, then Florida is going to say, ring, 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 ring. This e-commerce owner have triggered economic nexus. We're going to expect them to be filing a sales tax license with us, so then sales tax license permit with us to officially have to start collecting and remitting sales tax to the state of Florida, right? So in the past, I think because Shopify was one of those platforms that wasn't part of the whole regulation where they made like Amazon, Walmart all start collecting sales tax on your behalf. They were one of the ones that says, nope, it's the owner's responsibility. It's not on me. So they're like, but now I think they're getting even more pressure from legislation saying, no, you got to warn these guys that they have sales tax liability in all these states. They have to start collecting, right? So this is the worst case scenario. I'm sorry, I'm going along on this, but this is like a very important topic right now.
No, it's interesting. And is that 200 orders or $100,000 over a certain duration of time, or is it lifetime value?
It's usually they look at the last 12 months or year to date. So if we're looking at September right now, they're looking at from January to September, have you crossed that threshold? Next month, they're going to look the same thing. From January to October, have you done 100,000 sales or 200 orders into the state?
Okay.
Yeah. So the whole thing is right now it's such a hot topic item because Shopify is doing it's front and center telling you have the sales tax liability in all these states, and they list it out, right? So we have guys who have never really watched out for sales tax and have actually triggered this, months back or maybe even last year. And they just kind of like went along their day and kept scaling their business, right? So now we have to kind of go back and then look at those sales tax liability and says, how nice or not nice is the state about, having you to file basically at a point where you didn't realize you have liability yet, right? Because this is the worst case scenario for guys, right? It's like you haven't started collecting sales tax yet, but you actually have liability to do that last year or the year before that. So then what's happening is the states are still expecting you to remit sales tax. They're getting their money one way or the other, right? But you're actually taking money out of your own profit in this case to pay for sales tax. Rather, if you're actually turn on that feature, right? I think you go into settings, taxes, and you turn on the feature for that state, you're really just remitting, right? You're collecting that 6% or 8% from the customer. You're keeping it there, and you're knowing that's not money that's part of your profit. And then when it's come to file your taxes on a quarterly or annual or monthly basis, you're just saying, here you go. Here's the money I collected for you. I'm just holding it for you, just like any retail store would do, right? And then you still gain the profit you did. The worst case scenario is if you ignore it for year after year, you're taking a portion of your profit then now. that you thought, you have, oh, great, I have a 25% profit margin this year. I'm doing great. That could be cut by 10% if you haven't paid a certain state's sales tax. Now you're gonna be like, oh shoot, this is what I have to do. You can't go back to your customer and be like can you imagine emailing 2,000 customers like, hey, sorry, forgot to charge you sales tax the last year and a half. My bad. You think you can PayPal me this amount? Yeah, that's not a thing.
That would never work.
That's not a thing. Yeah, that would never fly. And they probably would just archive your email right away. Right.
Well, so what happens if and I'm sorry if I missed it. I think you might have covered it. But if someone does collect the sales tax and they don't hit the $100,000 threshold or those 200 orders?
I'm so glad you asked that, because that's what the advantage of having someone that understands how sales tax implementation and all the threshold or nexus rules. Because literally every state has different rule. Like, I wish this was a federal thing. No, it's a state by state thing. So every state's like, it's like monopoly. Right? I'm just gonna come up with my own house rules of how this works, right? So what I mean by that is what you can do is what you can do is you can have some strategy of this, right? If you are able to monitor this on a monthly basis, or someone can do that for you, what you can do is when you get to a year end in the November period, maybe after Black Friday, after your big sales quarter, right? You're saying, and then I come to you and say, hey, Steve, made up a name. I see that you are about to trigger sales tax for Utah, Nevada, Ohio. You're at 90% mark for 100,000 sales. What do you think about not triggering here and focusing on your Facebook ads and exclude those 3 states of customers? What do you think about that? And they're like, light bulb moment. Let me see how much sales I lose out usually at a December period for these guys. And let me see how much less compliance work and less returns I have to do, right, to not serve those 3 states. And then they do the math. They're like, I'm fine serving the other 47 states. I'll just push harder in ads over here. And I don't have to register for 3 states of sales tax registration. And because that's cumbersome. And then you're pretty much locked in to do the quarterly return, right, for the next year, now that you have sales tax compliance in those states. So that's part of the implementation strategy I talked about in the beginning. And that, if you have someone that monitors that stuff for you at year-end level, they're like, you're close, but you're not there. And that's not triggered. Why trigger it, right? Because it's neither over or not. You're at 99,000. They're like, you're not 100,000. It's like a hard and fast rule. You have 198 orders over the year. You're good. You're safe. Don't take in 2 more orders, right? If you don't have to. Like, can you imagine just being at 201 and then having to file? That's like the worst feeling, right? But you don't know that. If you didn't do the concentration report, which we prepare for our clients, you just go over it and you're like, oh, I can't avoid this.
And that's tax on all the 200 units plus anything you sell after, right? It's not just anything after 200 units or $100,000.
Yes, it's tax for the 200 and then everything beyond.
Okay.
Is that you said that it's now on the Shopify dashboard, and
very prominent.
Does that also apply? This is an idiotic question, but that also applies to all the sellers on Amazon too, right? Because I feel like I've always paid sales tax on Amazon.
Well, Amazon, I think Amazon collects it for.
Oh, you said that they collect on your behalf ahead of time.
Yeah, there's a term. I'm not sure you guys are familiar with. It's called Marketplace Facilitator Law. So is this new law that I think it was under Trump? I don't quote me what administration came under, but is this law that came into that addressed on this? And I think Amazon, I think Walmart hopped onto it, and maybe Etsy too. But basically, these guys are like, okay, we understand there's a sales tax obligation. So if you're an Amazon FBA seller, they will just do it for you. They'll collect the sales tax for you and then remit it for you. So I think most things I buy, I'm a big Amazon Prime user. So like, and most thing I buy on now, there's a sales tax component, right? It used to be like you buy online, you can escape sales tax, right? Then they made it a lot more stringent, saying, nope, you guys are just a business just like anyone else. You have to collect sales tax. So I think I haven't gotten not taxed on an item in Amazon in a long time, because they just do it for you and then remit it for you. I mean, I think it's still a good idea. Excuse me, if you're up there, to have someone check to make sure they're doing it correctly. So then, because at the end of the day, they're in the term of service, it's like they're still saying it's your responsibility that you're remitting the right amount to the individual state governments. But they do that part for you, which is kind of nice, right? But also, I think most people on Amazon user are used to it, right? Mm-hmm. The whole thing is, we have clients asking us Shopify, it's like, oh, is it going to affect my sales? Like what is like most, because Shopify users, they want to keep things simple, right? Free shipping, no taxes, like just pay just $29.99 and you get the item, right? They try to keep to get that impulse buying into it, right? And I understand that, because I ran the shop last year too, and I was like, $25 if I get 2, kind of all kind of goes promotions, right? So I understand that it could be a little detriment for some people. But I mean, I think it's such a common thing now, with Amazon having the big rollout, like people expect to pay sales tax now. So we try to explain that to customers. Obviously, some people can be a little bit turned off, right, when they see the sales tax number, but it's so commonplace now. And they expect to collect sales tax, most online entrepreneurs.
Yeah. Okay.
I feel like sales tax, I don't know. That's not the one thing that's going to stop me from buying something. Like if I see an extra $3-4, I'm like, fuck it. The thing's already 50.
That's what owners want to hear.
You kind of like mentally factor in sales tax, but if there's like honestly, if there's any shipping fee,
you're just super turned off, right? Yeah.
I would rather wait. Like I bought the TikTok leggings, sue me. Yeah, I'm basic again to what you said before. I waited weeks for those and I was like, it doesn't matter. I don't have to pay for the shipping. Screw it. I'll wait for forever. But the second I have to pay for shipping on something, I'm like, do I need this? Like it makes me really
it makes you question it before you click that place order button, right?
Yeah.
I think that's why the whole thing being Amazon Prime user, there is no shipping on everything you buy. So then you're just used to that. You're like, $25, buy now. $27 buy now because you're expecting free shipping being a member.
As long as it's a Prime product.
Yeah,
because if you
I
have
check that box
FBM,
to make sure.
Make sure it's always a Prime product.
I need that 2-day shipping,
But even not shipping on or shopping on Amazon, if you're through like a different e-commerce site, there's usually have like a free shipping option. It's like you can get it in like 2 to 5 days or like 1 to 2 days, and you can pay for those. It's like or wait 5 to 7 business days, and it's like we're gonna wait. Like everybody has an option anyway.
Depends what you're ordering. But when it comes to the remittance from the marketplaces themselves, is that something that they file on behalf of the seller, or is that something that they just sort of give back to the seller at the end of the year and say, or whenever tax time comes around and says, hey, you have this much available to pay the governments in all these different states?
Yeah. So what I'm seeing from the Amazon FBA side is they literally withhold the portion, right? When you download your monthly report, they'll say, this is the portion withheld for sales tax. We're going to hold on to it. So then your payout is going to be that minus the sales tax portion, the 14-day payout. And then they will actually go ahead and say, they'll remit it out on your behalf.
Okay. And then, so I know we talked a lot about tax, but I think a big question from a lot of business owners, not just Amazon sellers, but everywhere. And personally, I have a lot of questions too, but specifically for business owners, are deductions. And because there are so many different tools and partners and handling of this entire international supply chain and costs that are associated with the business, can we run through some of the major deductions that you see typically from, let's say, a brand that does work with overseas manufacturers?
Yeah, great question, Francois. So I can talk about this topic a lot because that's kind of what we do, right? We try to maximize all our clients' tax deductions and credits and any special provisions that they're privileged to have. And the reason why we do that is because we're trying to minimize their tax deduction. And like any money they don't have to pay out to the government is another dollar back in their pocket, right? Another dollar they can use to reinvest in their business, take it out, buy their kid a new car, things like that. But a part of what the question you asked is what are deductions that are most available, right, for business owners? And then what we try to teach them is there's things that are very obvious, right, that they can do. Obviously, if they buy inventory, all inventory are at what they call a cost of sales. So that's definitely going to be deductible. But then there are things that are a little bit more unknown, right? There are things that are, one of them that we tell our clients is what they call startup cost deduction. Startup cost deduction is basically saying, hey, government's going to reward you for being an entrepreneur. You just started a business. So we're going to say, here you go. Here's $5,000 tax deduction just for starting a business and just for going through the process, right? So the startup cost deduction basically reward you for doing product research before you start up the business, for going to talk to suppliers, right, about the parameters around starting a business, and any kind of compliance things you have to set up, right, like setting up an LLC, talking to attorneys. That's all can be a tax deduction for you as you start up a business. So that's always great. Another great deduction for online business owners is the home office deduction. That one's big. And that one was really important during the COVID time where everyone moved away from their office life, right? If they had an office setup and into the home life. The home office tax deduction basically saying that, hey, you're working from home. Well, we should reward you because you're still running your business from home. So what they do is there's two ways of calculating it. One is what they call the simplified method, is where you take a rate that the IRS designate and you just multiply it by the square footage that you use for your home. And that's fine. And that if you just want a quick deduction, that's fine. But that one is capped at $1,500. The more, I'll say, more like a more computation involved way, which something you want to take advantage of and do a comparison of, is you look at the square footage of your home. Let's just say it's 1,000 square footage, right? And then you have, say, you use 300 square footage of it as an office space for your business. What you can do then is take 300 over 1,000, and that's 30%, right? Then everything that you use for your home, take its utilities, gas, water, electric, the mortgage or rent that you pay for your home, any kind of repair and maintenance you do for your home, you can take all of that, add it up times 30%, and that's your deduction amount that you get now. So that could be a pretty big number depending on how you run your operation, right? I know some people do all the logistic and fulfillment at home. So they're like, I use half my home to run my business. They're like, congratulations, you're gonna get a huge deduction as long as there's two rules you gotta follow. It's gotta be exclusively used for the home, right? Like I have to say that I can't use this space for anything else. I have to use it. I only run it for my business. It can't also be a kiddie playhouse. It can't be a living room. Living room is a very bad idea to do this because if IRS ever audit you, they're like, really, a living room? You're gonna claim you don't watch any TV there? You don't claim there's any family activity there? You want it to be usually an enclosed space of some sort where you say, yep, look at my boxes. I'm definitely running my business in this. And so that's a huge deduction you want to add. One other thing that I do want to mention, since we're on this podcast with Noviland, is inventory. There's a little secret there that you guys can utilize, right? If you're importing inventory and you're on what they call a cash basis taxpayer, what you can do is what they call accelerating your expenses. And this is a trick that you only can do on your cash basis. And it's basically saying that as you're approaching around year end and you're talking to your accountant or CPA, you're like, what are other ways I can, get more deduction this year? I think I'm gonna have to pay a lot of taxes. I don't want to do that. Well, you should talk to the good folks at your fulfillment partner and say, hey, is there any way I can buy another, like, say, $200,000 of inventory and just keep it there and make sure it arrive by December 31st? Yes, there can. So what you can do is you basically say, you forecast out, say, next year, I know the demand on my product is still good. I'm going to go ahead and pre-order inventory and keep it in my fulfillment center. This way, I get another $200,000 of basically tax deduction that I can use during the current tax year. And that's the thing you can legally do. You're just accelerating it. I mean, you won't get it next year, but then this year, when you go file your taxes, you get that $200 deducted from your taxable income, whatever that number is, right? So accelerating your inventory is a great trick that you can use as long as you know that your items are in demand, that you can sell off your inventory next year.
Yeah. This kind of sounds like cheating the system. Have you guys seen the TikTok where it's like like shit that sounds illegal but isn't? Like, this sounds like that.
Oh yeah. We're not here trying to peddle like life insurance. So hopefully this is all things you can check online. You can Google it if you want. We're just trying to what we like to do, and what we tell our client in a humorous way is like we're just like more like a personalized Google. You guys remember like Ask Jeeves back in the day? Okay, yeah. I'm not sure of this. Okay, but Ask Jeeves was like kind of like that. Just like you have a little icon of a butler, and you can just ask him questions. Yeah. We're kind of thinking about it like that. We're like a more personalized Google, where like you get all these answers from Google, and then you're not sure which one's right, especially with something like where it's more a niche question like this. And then we're like, yeah, that sounds good. We're trying to debunk the myths that you guys read. It's like, I think I can do this. No, you can't. I think I do this. Okay, yes, you can. We're trying to be that person for you when they talk to us, on Slack or something.
It's like going to a real doctor instead of just consulting WebMD.
Yeah, instead of like a wish doctor. But yeah. You guys go like WebMD. I think it's a good way to get basic information. But yeah, funny name will come.
WebMD is just going to tell you have cancer.
You have cancer, you're going to die. That's the only response you get from WebMD. You have a headache,
you guys are absolutely right. It does make you panic because they literally list out every single side effect that you can get for like a common cold or something, right?
I've been banned from WebMD. My best friend doesn't let me go on WebMD anymore. She's like, no, shut it down.
You just get overly worrisome, right? Yeah.
Oh my God.
When it comes to I think a big part also, we've seen a lot of players really grow and scale, right? But we've also seen a lot of players sort of go out of business because they couldn't keep up with inventory, or Amazon screwed them over and didn't allow them to continue sending an inventory, and they just lost their BSR and whatever the case is. But how does that work when it comes to taxes and you're starting to, let's say, go out of business, or you have to file for Chapter 11, particularly as an e-commerce LLC?
Yeah, that's a great question, and something that we heavily try to avoid. Okay, so it's a great question, Francois, and I would say that first of all, none of our clients have in any kind of danger of that, and I think we credit that because we do what we call look aheads, right? Forecasting, otherwise known as, is that we're able to use the historical data that we have from doing their clean bookkeeping and say, let's project out what's going to happen the rest of the year. Let's project out in the next 6 months. Does it seem like your revenue and your margins are trending in the right direction? And it does seem like you have kept enough cash on reserve for any kind of downfalls, right? Like, what if your revenue falls 30%? Are you guys still okay? What if your revenue falls for 50%? Are you guys still okay? We do these kind of what if scenarios for our client, so that at any point in time they're like, okay, what do I need to cut to survive? Right? Say they have employees in their company. Like, how many do I have to get rid of? Like, they hate these questions, but it's better to know ahead of time than to find out the moment that your business does have that downturn. You start in that that meme where people just run around, there's a fire going on. Yeah. So you don't want to be in that meme situation, right? So if it does come to that worst case scenario, what they do is they do what they call wind down, or dissolving of your business, right? Where depending on how you set up, or any kind of partnership agreement or operating agreement you have with other affiliations to your business, you have what they call like first payer rights to certain lenders, right? Where they're saying, okay, your business is out of business, I understand, but you still got to pay us first versus the other creditors in line that you owe money to, right? And then usually that's a more complication where you have to go do like bankruptcy court, and they're saying, okay, whatever money you have left, or whatever asset you have left, liquidate it, and in order of the people that you owed because of the rights they have to the claims in your business. And usually as business owners, you get very last rights because you owe all these other outsiders money, and like maybe your credit card bill will be like in line as number 2, right? Or if you have a bank loan, they may be in line number 1. So you got to pay them in order. And then hopefully when LLC, it does provide you that protection where you can, declare chapter 11, whatever chapter that you want to declare, and just say, I went bankrupt. This is all I can do. Please don't come after me. And hopefully they don't have any angle where they can. And that's also what we warn business owner about is, please do not mingle your personal spendings with your business spendings, right? You don't want to give the court or anyone else an opportunity to say, hey, they're actually not a legitimate business. Everything they do, they bought Starbucks on their business card. They bought their kids' toys on their business card. There's a term called piercing the corporate veil, right? Where they're saying you're not actually running a legitimate standalone business. We're gonna pierce through that corporate veil and go after your personal asset. Hopefully you just run a business that by itself, it's only business expenses flowing through there. So then at the end of the day, they can only go after your business assets. And unfortunately you went out of business, but you yourself personally is still fine. And hopefully in a couple of years can start again.
Wait, can you not do something like buy food or buy Starbucks or any of those classic expenditures that I thought you would be able to do with like a company card, for example?
Well,
sure.
Can you?
If you can tie it to a business purpose, right? Like if you're an online entrepreneur and you say, I'm eating a meal at my desk, I'm eating a business meal right now, right? If I'm out at a restaurant, I'm meeting with a client, or I'm on the phone with a client, right? That's a business meeting. As long as you can tie that purpose to your business, yeah, that's a legitimate business purpose. But if you're, for me, if I'm buying like a baby shark shirt, for my business, then I'm gonna have a hard time holding that up in court and say, yeah, I needed this for my business. I need to wear it. You know what I'm saying? Like, it's
maybe you did it for shock value. It's a marketing ploy.
How do you wear this? Like, I find a way. It's shrunk. There's certain things you can legitimately like have a reasonable way to argue that is a business purpose, but there's other things that's blatantly not business related, right? And I see people commingle that. And we really encourage them to not, right? That's why we want them to have a business bank account, a business credit card, right? Where they can, when they go out and make a purpose, they can kind of think one moment, okay, what am I buying right now? I'm at Home Depot, I'm buying something like boxes, right? To ship things out. This is definitely a business purpose. Let me use this card, right? Where they're at Bye Baby buying a stroller, right?
Yeah, that's a little different.
I want to put down your business card.
Maybe it's a sample. Maybe it's a prototype that you want to build your own.
If you're trying to start a baby store and you have a website that says, I want to be hello baby, right? The opposite of bye baby, and you can prove that out. More power to you.
Hello baby. I love that.
If you can prove that out, more power to you.
I'm glad that you broke that down, and I'm assuming that applies a little bit more intensely to the solopreneurs or the really, really small entrepreneurs. Because I was just thinking, like with my previous employer, from if we were going on a conference or like a business trip, the moment I got to Hartsfield-Jackson Airport, my company paid for it. It wasn't on a card; I got reimbursed, but I had to provide my receipts and everything. I'm like, I absolutely bought coffee and gum and
Oh yeah, because
like client gifts.
You're doing you're on your business travel right now.
Business
Yeah.
travel. Okay.
Yeah, business travel is a great deduction too, by the way. If you're doing a lot of business travel, business meals, there's ways where you can I have a YouTube video up about how you can like fit in a vacation in between your business travels, and you can put that in the middle. So if you have a business owner that's interested in doing that, because I know a lot of business owners are too busy to take a personal vacation, right? So we try to tell them like you can fold that in, right? As long as the beginning and end part of your trip is for like say a conference, right? Say like just take a 7-day trip, you can fold in a couple of days of personal time in between that, and your beginning and end will be business purpose. You like your fly in or your fly out has always been business purpose. Your meals during those times is for business purpose. Make sure you can do your dry cleaning during those time too. All business deduction deductibles.
If the Gatita team doesn't know about this, they should, because they are flying
They 100%
everywhere
do.
and everywhere.
They 100% do. Those guys are money guys. They 100%
well, that's true.
know.
Yeah, they are money guys. You're right. I hope he's getting some time off in between all these conferences.
Yes. Now, when it comes to all these deductions, is this something where you would typically look at sort of their profits and try to deduct as much as possible to zero that out? Legally, of course, but is that something where, like, let's say there is a business owner that does want to try to do this themselves, at least for a while.
Sure.
How do you start to try to maximize your deductions without having the knowledge that you have as a CPA of like, this is deductible, that's deductible? I guess, how much should you try to deduct?
That's a great question. And it's really one I want to kind of like be careful about answering, right? Because obviously, if you're just doing it yourself, you want to get some education in the space, right? You need to want to Google things, look up YouTube videos, go do a little like online course, right, about accounting and tax deductions, to not do something where it's a little bit of a hearsay. There's a lot of hearsay around taxes and accounting things, and there's a lot of like things like misconceptions even, right, around like tax planning, and everyone thinking like April 15 is the only time you worry about tax and things like that, where like I feel like owners, and I've seen it, it's neither two ways. Neither they are afraid to take deductions that they're actually obligated to take and they miss out on it, which is very sad face, right? Or they do too much and they do it in such a questionable way where they're like, I'm just gonna claim $20,000 of like dry clean I done this year. And things like that, and in a way where you're gonna be immediately flagged. And like the IRS, they're busy people, and they have certain internal thresholds, right? So if you're really, really, really small, I'm gonna be honest, most likely you can get away with some stuff. Well, to be honest, right? But you have to look at the risk factors too, right? It's like if you go too overboard on some of the deduction taking, you're gonna get flagged and you're gonna get audited, right? And especially as you grow, as soon as you cross that 7-figure mark, they start paying a lot of attention, right? If you're past the 7-figure mark and you're still trying to do it yourself, just be careful. I would say that's the whole thing, right? Because you're kind of on the radar in a certain way, radar, like quote unquote on radar. So I'll just be careful what you take. I mean, if you're very conservative, obviously that's great. But if you're conservative, that means you're missing out on money that you didn't have to pay, which is also bad news. It's kind of like the whole Goldilocks thing, right? Where you don't want the smallest bowl of porridge, you don't want the largest bowl of porridge because you're in trouble in this. You want the one that's just right, the right amount of tax deduction you're supposed to get under all the legal laws, right? Because you understand the tax code and you want to be that middle bowl, right? To not anger the bears.
That is a perfect analogy. And where can somebody, maybe one of the smaller e-commerce business owners that isn't quite ready for the need of a CPA or an agency like yours, where can they get some solid, reputable information that like they can rely on and actually use and not get in trouble with?
Like a course.
A course, yes. Thank you for that. We did. Me and Stanford did spend 3 months actually building out a course for this. It's called Tax-Free Ecom, Hyperdrive Your After-Tax Profit. And the whole point was we were getting a lot of like messages and DMs from people saying, "What do I do about this?" And like what do I do about this? And they're just starting out, right? And then they're not the type of client we would like to take on just because we only like happy clients. And we don't feel like we can make you happy, we don't take you on, right? So these are the guys who are just starting out. I'll say between the 0 to 300,000 a year range. And we're like, let's take some time, build out this course, and just to serve these guys. So then even starting out, they have the right foundation, right? So if they want to do it themselves, they have this knowledge now after watching this course to say, oh, this is the world of possibilities of deductions I never knew. So if they still want to do it themselves and want to save some costs, they can just go do the course and learn about all these deductions, learn about this different business strategy they can do, learn about what the optimal entity is. And we also have some module of, oh, now you made a lot of money. What should you do now? How to diversify your income and how to, eventually hopefully sell your business and find financial freedom at the end of the day.
Gotcha.
How much is that? How much is that course?
I'll tell you how much financial independence costs.
How much independence?
How much financial freedom costs? I think right now we're having it's pretty as much a sales amount right now. We have it as 2 price points. It's I think $299 and $199. $199 will get you the course only, and then $299 is you get the course and then you also get a consultation call with us. So after you halfway through the course, if you still have questions, you can get on a call with either me and Stanford, and it's kind of like an AMA. Ask us anything that you learned, what need more insight into it, and then we'll have to get on with it. So that's the 2 package we have.
Okay.
There you go. For an extra $100, you get Alan for an extra 8 hours. Of
8 hours. Thanks for signing me up 8 hours. That's like expectation now.
And then what size seller would be a best fit to work with your company, with your agency directly? There maybe have greater needs than just the course, and there's somebody that you guys can take on as a client.
Yeah, thanks for pointing that out. So I'd say we usually start thinking about taking on clients around the $300,000 annual revenue mark. On average, our customers are more trending towards close to $1 million on average in annual revenue. We set this bar, if you will, because we just from just all the benchmark analysis we've been able to do on all the returns that we've done for the e-commerce clients and online business ones is after the 300,000 mark is the point where we can feel like we add the most value, right? It's where we can find the most deduction for you and most meaningful business strategies to help you implement, right? Because I think before that, you can actually just go do a course, my course or anyone else's, you find, and really learn it yourself, because at that point you're still trying to scale and trying to save some money, I would say, right? To make sure that you have enough cash flow to put into Facebook ad, and you should do that. You should try to scale your business to a certain point before you really have to hire some talent to worry about the back end stuff. I would highly encourage that. But after say like the 3 to 500K mark of annual revenue, then you're like, I have a little bit extra cash flow. I don't want to worry about this stuff, but coming back to haunt me. Let me hire someone that really understands my business to take care of that while I focus on getting to the next level, getting to that seven-figure mark and 8-figure mark, and taking it to the moon, as they say.
Awesome. And where can folks learn more about your course and about working with your agency?
Yeah, great. If they want more information about the course, feel free to go to freecashflow.io. I think it's /course, so it's pretty easy to remember. And if they're looking for more accounting or tax help, or want to get on more of a discovery call with us, it's just freecashflow.io/book. We try to make the URL as easy as possible to remember.
Nice.
Yeah, seems like it.
Love it. Awesome. Well, Alan, thank you so much for being on the show. It's really been super insightful. I definitely understand it a little bit better than I did before.
Of course,
I'm sure that our listeners did as well.
Yeah, thank you so much for having me on. It's been a great time. I know tax and accounting is not the most fun subject to go into, and fun things we want to listen to. But I just want to emphasize, if you are a growing business, it is very important. You want to keep that hard-earned money that you made throughout the years and not give it away to the government or IRS or any other government, right? So just make sure that you can keep all the money that you deserve back in your pocket and your bank account.
100%. That's what we're here for, to help people make and save money. And if you guys liked what you heard or saw today, please be sure to give us the thumbs up, comment, share your thoughts in the comments, and share the episode with your friends. Rate us 5 stars on Apple Podcasts. You guys know what to do. And be sure to ring the bell so that you never miss a notification for a new conversation with a leader in supply chain and e-commerce, just like Alan Chen. Alan, thank you so much.
Thank you so much, guys.